Good evening, traders, and welcome to BCR's Evening Market Outlook, bringing you the key fundamental drivers that move the markets today. Let's take a look at what's been unfolding across the majors, oil and gold. We'll start off with the US dollar. It managed to rebound today alongside equities as tariff concerns began to ease and markets found a bit of balance. Despite some recent political noise around Fed independence, the dollar was oversold and undervalued heading into the session, so this bounce had some technical legs behind it too. On top of that, better FX liquidity and comments from Treasury Secretary Benson pointing at a softer trade stance helped sentiment improve. Remember, the dollar remains the most sensitive currency among the G10, so any shift in tone of tariffs is going to hit it first. While short-term risks are still around, a repeat of extreme selling seems unlikely at this stage. Stabilization is looking more probable than further weakness. Now turning to crude, what a rough ride it's been. The tariff-driven chaos has really shaken the oil market, weighing heavily on demand expectations and rattling investor confidence. Volatility has surged. The 30-day annualized volatility on the near-month contract hit 42.8%, which is up 23% from early April and close to levels we have not seen in the past 30 months. Both Brent and WTI posted their largest sell-offs since the US tariff announcement on April the 2nd, mostly on the back of long liquidation. A bit of short covering rebound could be in the cards. That said, the market seems to be shrugging off the latest OPEC pledge. 7 countries are committing to deeper cuts through mid-2026. But Kazakhstan has again broken ranks, citing national interest over quotas, which complements this picture. Lastly, gold pulled back sharply, down nearly $200 after briefly spiking to $3,500. That move was driven by broad de-risking. These kinds of corrections are not unusual, especially when gold becomes overcrowded. Still, dip buying remains strong, especially from physical buyers like central banks, which has helped keep a floor under prices. The easing of US tariff tensions seem to have triggered the latest drop, but trade uncertainty hasn't gone away. The real risk here, if central banks demand unexpectedly falls or we see large holders liquidating. Another key downside trigger would be a resilient US economy, forcing the Fed to act early on inflation. That could spark another round of outflows from gold. And that's a wrap for tonight's market outlook. We'll keep watching the headlines, especially around trade and monetary policies as they continue to shape sentiment. Thanks for tuning in, stay sharp, and I'll catch you in the next one.